Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Monday, October 28th, 2013. During Sunday's Globex session, S&P futures broke out above the prior multi-year high at 1754 and auctioned up to a new high at 1762. The rally up to 1762 encountered a lack of buying interest. Selling pressure entered the order flow as the S&P sold down from the high and pulled back at or near 1751. During Friday's session, prior to the market closing at the high, a narrow cluster of trade developed between the 1752 and the 1748 price level. In today's session, S&P futures held support at the upper edge of that narrow trade cluster. Buying interest entered the market during the pullback, and the S&P auctioned back up but failed to retest the overnight Globex high. For a detailed review of today's market developments, we'll turn our analysis to the 5-tick range chart. Here we see the overnight high that developed during Sunday's Globex session. At the high, the order flow events indicated that the demand curve turned down. There was responsive selling on the uptick, and the selling pressure accelerated as the S&P sold down below 1758 and pulled back to the minor support level that developed during Friday's session. Following the sell-off down to 1751, 1752, the selling pressure ended. The computerized buy programs began to initiate trade, and the S&P auctioned back up to where the initiated selling had occurred as price sold off from the high. The initial retracement encountered a lack of buying interest. High-frequency selling emerged again, and S&P futures sold off from the high and pulled back to retest the low a second time. There was no selling associated with the second pullback to the low. The order flow sequence turned up, and the S&P traded back up to the upper edge of the polynomial band at 1760, where the responsive selling had developed in the overnight session. On the retracement back to 1760, buying interest waned, selling pressure returned. The market made a minor downtick at or near 1754 at the reflection point where the demand curve turned up off the low. S&P futures retested the 1760 high at the close of the session, but once again there was no buying interest, and price sold down modestly in the overnight session, pulling back at or near 1756. Coming into Tuesday's session, the minor cluster edge down at 1751 and 1752 is the weakest support level. There are several minor support levels that developed as the S&P auctioned up off of last week's low down at 1735, 1736. Last week's low remains the near-term support level, and key support is located at the prior multi-year high at 1726. The minor or secondary support level that developed last week is down at 1740, 1743, and again at or near 1748. These are not considered to be major or significant support areas. In the event that there is a serious sell response, these areas would prove to be relatively insignificant stopping points. Currently, today's high and the overnight high represent what is referred to as a stopping point of the up move. It is not yet considered to be resistance because the S&P has not sold down the distance of a daily range below the current high. This week's maximum likelihood expectation target is located up at 1775. That concludes today's recap of the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.